So, according to the street, when inflation goes down, that's a bad thing. What do you want me to say to you? Well, well, well. I hope you paid yourselves today. Bitcoin takes a very interesting move to the downside. The NASDAQ and the S&P close to the circuit breaker, 7%. That means they would have shut the stock market. Trump has his cabinet meeting, and all you're hearing is, you're the best president in the world. Yeah, you're the best president in the world. And he kept saying, inflation's down. Market just says no. I think President Trump will go down in time as the pump and dump president. Anything he says that is good is equally welcomed with a loss or a drop to the downside. Now, I'm going to be straight with you all. If you think crypto is not subject to any of what's going on, you got another thing coming. The NASDAQ and the S&P they're not listening. They're hearing what Trump says, but they're not listening. Yesterday's gain of 12% in the stock market was unbelievable. And they just brought it straight back down to the vector recovery, man. Unbelievable. Tonight, we're just going to try and keep this live short and sweet. And we're just going to try and make sense of the madness. Euro up 2%. Euro up 2%. Well, that 13% obviously got people's attention and they started buying loads. So that makes sense. The 30% on the yen. I'm so sorry. But what the fuck is going on? It is dog eat dog world out there, man. Everyone on Trump's beck and call. Is China going to do a deal? Is China even retaliating? Is China just gone to bed? Let's break it all down, man. Economic angst hits Wall Street. They're concerned. Of course you're flipping concerned, man. Look at it. Here we go. NASDAQ. I mean, they just swept the liquidity, hit the midpoint of the vector candle to only make a little bounce. Nice little flavorsome move right there on the NASDAQ. We go to the S&P, does the same thing, comes back down, gives back all of what Trump did yesterday to only mark it back up ever so slightly again. We go into the 10-year bond market. They're not interested. 2-year yield is also negative. The 10-year yield is positive. What is going on? When you see the 2-year negative and the 10-year positive, it means investors, or should I say, the market is really edging the market to try and get into the 10-year because that's really that's the sweet spot for investors, the sweet asset, the safest asset. Besant today saying that the US debt is the best thing. It's the most safest investment. It's not working. Tariff-driven inflation is the story, ladies and gentlemen. Listen, the last time inflation came down, the stock market just went crazy. Went up for about a 2.5% increase, okay? But according to the data today, let me just get it right in my mind. The inflation came down and the bond market was actually good with the 30-year bond auction. They came in bid to cover was fantastic, 4.81 when they projected when they had 4.62. So they're sweeping up the US bonds. You're nearly at 5% on the 30-year. Crypto. 722 million outflow. So, Bitcoin, store of value, hedge against inflation. Man, shut the jokes aside, guys. The logic that we've got right now is investors don't know what to do. They don't. And what did we say yesterday? Yesterday, we said that the market wants yield. Bitcoin is deemed as a high-risk asset. NASDAQ is deemed as a high-risk asset, okay? The bond market doesn't even look like it's seen as a safe haven. So investors are doing what? They're just running over to yield. Having a look at the rate swap monitor today, 13% on the euro, 30% on the yen. Let's go and have a look at what's going on over there. Right, euro up 2.29% for the day. That is absolutely wild. Let's get rid of all these drawings. Look at that, absolutely crazy. Going over to the Japanese yen, what's going on there? Up nearly 1.9%. Investors are not even interested in Trump. They're interested in yield. And that's what you've got right there. So when we're in this dynamic of investors not really putting the money, because most of you are like thinking, okay, one day the market's going to go up, it's going to go down. And we had great news yesterday because there's a pause on the tariffs. So the pause on the tariff has now effectively led to the buildup of tariff inflation. Going into the bets for the Federal Reserve, we have got them still betting now that the Fed is going to keep it at 4.2, 4.5% on the rate. Investors are a little bit all over the place with it all, and you never, ever see the 10-year yield higher than the 2-year yield. They don't want their money for shorter periods of time. They want it for longer periods of time, which is why the 10-year is trading upwards, the 10-year yield. I'm telling you now, this thing goes up to 5%. You've got yourself a very interesting story. Stock market will just bleed out completely, but that will trigger a lot of interest in investors. The 30-year is nearly close to it, okay? And you've got to really pay attention to these because it tells you where the sentiment is across the board. Yields up, stock market down, okay? The volatility index is just toying around the 30 zone, going into the CBOE one, and you can see it's up at the 40 region, and it's all over the place. When the volatility index doesn't maintain a direction, it shows you that investors are neither here nor there. It either needs to go up or it needs to come down. This sideways price action is telling you that investors, they're on the edge about things. Going into the order flow of Bitcoin to understand where we are. They're just getting ready for it. They are getting ready for the next event. Look at all of this liquidity right here. The bids are coming in, okay? Tomorrow might be a bit of a tricky day. Data coming out tomorrow is going to be giving us the idea that the PPI, which is the cost of goods and services, is coming in at 0.2%. This is going to be crazy because they're expecting it to go up. Fed speakers today have been giving the idea that they know that inflation is a problem. They've not stipulated it, but they're saying that the economy is doing great. So you're really giving a mixed signal to investors. But what's going on right now is money that is trying to move around to places, but investors can't commit to it. That's why you see assets appreciate and then they depreciate straight away. There's no longevity in investors' mindset about keeping risk on. That's why when I say pay yourselves, ladies and gentlemen, you've got to, because Bitcoin, it just does this stuff. The live stream this morning suggested the logic of a trap. It was a trap. It came down back into the vector candle recovery. Unbelievable. And Trump's done it again. Pumps the markets and dumps the markets. Did anyone see that conference where he had in the Oval? Did actually anyone hear what he said? He welcomed Charles Schwab into the Oval. And he said, this guy right here made $2.5 billion yesterday. And this guy right here made $900 million. Like, did not anyone pay attention to that? Boy, when 90% of the marketplace was net short, and then that happened, bro, retail does not buy when prices drop. Only the fat cats do. And that's evident when you see price action like this. When you look at the order flow and they're buying as it drops. Yeah, he screwed everyone. He did. He really did. Any questions, ladies and gentlemen? Mad love, Jamie. Tina, the 5-day is a violet candle. Viola candle. What the hell? Tino, can you explain more about the follow-through day on the NASDAQ? Can this also be considered for Bitcoin and the total index? Okay, let me explain something. Right. The logic of a follow-through is this. In my opinion, buying stock right now would not be wise, in my opinion. You're probably still going to get a bit more of a discount on it. This is the volume today on the NASDAQ. Above average, way above average. Okay, down minus 4.3%, and it's up 51%. Institutional investors are offloading again. Okay. Until we get 3 consecutive days of volume above the 50-day average, and which is above this red line right here, and the price action closes positively on each day, the follow-through day would be the 4th day that would then lead breakouts, okay? But the problem that we've got right now is this. We don't have any stocks right now that are getting ready to break out. So let me explain something. This is something that I explained this morning to the Platinum members. Because what I do with the Platinum members, I give them a video and then I give them setups. Today was a bit different because the CPI data, when it comes to information that is being released, especially the CPI, it's literally a gamble. And I don't want to encourage that. I try and do all my setups based on days that don't have that much mad news announcements. Okay, but the CPI information today was very important, and the market was like, it's not important. Okay, even though inflation is down, the market doesn't care about that anymore. It thinks that it's going to be a problem anyway because inflation from the tariffs is going to come into play. Okay, in front of you it says here that, and this is for something for you guys to understand about understanding the environment of stocks. Okay, it says here that on the day of yesterday's pump, 3,145 stocks had made a move up, okay? 36 stocks were down on volume. 3 were breaking out, and 6 were near a pivot. 3,165 stocks were up on volume, but 3 broke out, and 6 were at a pivot. What does that tell you? It tells you that there's nothing happening. Let me explain. In front of you, if there's 3,165 stocks, okay, that have all got volume that is positive, okay, naturally you're going to be expecting the idea that there's going to be stocks moving up. But only 3 broke out. So that means if there were any cup with handles in the stock market, they would have been breaking out, and that's what would have been going on, okay? So 3 stocks broke out. Of the 3 stocks that broke out, okay, this is what's interesting about it. I'll show you. When you want breakouts of stocks, you really want to be seeing the main names breaking out, okay? So it's not even done it anymore. It's done. Right, look at this. So the 3 stocks that are breaking out, one was a biological one, okay? One was an energy, and another one was a market maker that is based in the UK. In other words, they were very small companies. They both had 2 of them had volume that trades on average below 1 million shares a day. So that's nothing, okay? You want one that's actually got a lot of volume every single day, above 1 million at least, where shares exchange hands, all right? But they're names that no one knows. So if you're not seeing stocks breaking out and you haven't got any household names, or especially stocks with big market cap, you're not going to get anything. So we go back into this logic right here. You've got 3 stocks breaking out. They don't really have that much volume, not really popular stocks. No one talks about them. Done. So that's your breaking out stocks. There are 6 stocks that were pivoting, okay? So that means some of them were creating a cup with handle, and some of them are here, where they're getting ready to try and break the pivot. So they're right there. So there's only 6 of them. So out of 3,165 stocks, this was your criteria for a decent stock. That's bad news. Given that the whole market yesterday pumped so aggressively, that tells you that there's not that much flavor for you to take on. So going back into the idea of the stock market and the follow-through days, what you've got to be careful of is you need to make sure that you are witnessing volume coming in above average, especially above this 50-day red line right there, 3 consecutive days with a follow-through day on the 4th day. If you have this market surge and you see up on volume 2,000 stocks and you've got stocks breaking out to the sum of like maybe 100, 150, then you've got a valid bullish sentiment. And the idea is that if you can back up the volume with the number of stocks that are breaking out, then you're justifying the idea that institutional investors are coming in buying up stock. They ain't buying shit. And the ones that are buying are just little companies. Market cap of one of them was 2 billion. Oh, wow. That's chump change to the stock market when given that the NASDAQ is a $25 trillion market cap. So when you are investing in stocks, pay close attention to the number of stocks that are up on volume and, of course, stocks that are considered breaking out. And if you're not seeing stocks breaking out and you've got stocks that are 3,145 stocks that are up on volume, that tells you that most stocks are like this. They've been dropping, and then you get one candle like that. Well, what about all of this, bro? Like, you need to be going even further. Okay? So I hope that answers that question for you, my friend. Any questions other than that? All right, let's be honest now. How many of you believe that this range here is the Bitcoin bottom? Come on. I want to know. I want to know where your head's at. Recession is on the horizon. Of course, it's on the horizon. Actually, I'll tell you what. They will reclassify the idea of recession. They will never admit recession. They will never admit it. The UK went into one and then it came out of it. UK is like, okay, man, we experienced it. Why are you changing the classification for it? Don't you think that this cabinet is actually trying to sell everyone a bullshit story? Everyone's too happy. Everyone is too happy in that cabinet. Oh, here we go. No way, going lower. Noppers. Yes, you can just use a VPN, Mohammed. No, it's not the bottom. Not yet. Lower. The bottom is done. 69 retest, I believe. Now we need lower. Okay. 8K vector recovery. Not going to lie, mate. I forgot to look at Bitcoin. Never mind. There is no bottom. Donald and Elon know what they're doing. Yeah, they probably do know what they're doing. But when you are... Never mind. Tino, I'm close to liquidation with money borrowed from the Albanians around the corner. Now they want their money back, Tino. They have baseball bats, Tino. Help me. Well, at least they're not using guns, bro. So at least you can run away from a baseball bat. So I guess things are still all right for you. You can get a baseball bat. Hell, you can be friendly and throw a ball at them. If they hit it, then happy days. Don't take the piss, bro. You're seriously getting chased by the Albos. Like, oh, man. Yes, they're manipulating the market. Tino is a perma bear. Oh, you know what, bro? Like, honestly. How do you... Oh, fuck that. I'm not even going to try and justify it. You know what? I'm a perma bear. But I try and educate you all on understanding that when someone is selling, someone is buying. So am I a bear? Again, if you're calling me a bear, it means that you want to pay the highest possible price for Bitcoin. That's what you're saying to me. Anyone with a brain would be like, yo, please bring Bitcoin down. How many of you would buy Bitcoin at 9K? All of you. How many of you would buy Bitcoin at 79K? None of you. Why would you not buy it at 79, but you'll be glad to pick it up at 9? I'm sure we want cheaper prices, don't we? If Bitcoin's going to retain its longevity, it's going to go up and down. You're going to see the smack. You're going to see the Ferris wheel of cycles on Bitcoin. I'm hearing about the 4-year cycle with Bitcoin. It's getting pretty interesting, to say the least. They're saying, where was my article? Hold on a second. Black Wednesday, they're calling it. Where are you? There was an article that said to me that, 73 traders less, 73% less confident of getting, okay, never mind. Yeah, I can't find it. I can't find it. But an article said that the 40, something about the cycle, it's just pretty much gone to the bin. But never mind. That's why they're buying XRP. Stop it. Stop it. Do not talk shit. They ain't buying XRP. In comparison, it's done all right, to be fair. It's below $2, but not above it. Welcome to your new 50 cents. Tino, any books that can help in the perception of value? Not necessarily the perception of value, but you got to try and understand what makes people think. What's going to make someone believe that there's something worth going for? It's all about ideologies. You know, you can't kill crypto's idea. You can't get rid of crypto because it's an idea. All right. Other than the fact that no one controls the blockchain and what have you, but you get what I'm saying. But like, for example, Moonboy. Oh, look at the gentleman here who said Tino's a perma bear. All right, cool. So he's continuously bullish, right? So you can't kill the Moon Boy's idea of Bitcoin going up. Bitcoin takes a shit to the downside, completely collapses and goes to 1. And the Moon Boy is way more excited than he was when Bitcoin dropped from 100K to 50K. All right. You can't kill that idea. That's perception of value because that person still believes that Bitcoin is worth it. Right. But when you operate in an environment of Forex, where there are only so many extremes that it can go to. For example, if you look at the actual CME rate swap, you can see it says 13.65 and you're getting it for 2 days. That's your rate on 2 days worth of holding euros. They can't sustain that much. That tells me that in tomorrow's readjustment of the interest rates, sorry, the rates that the banks are offering at, then we're going to be then seeing a different reading. Okay. And if tomorrow's reading comes in and it shows 18, 19%, right, something stupid, it will be available for 1 day. Euro will be pumping tomorrow regardless. But just paying attention to the days till expiry is justified why Euro's gone up today, because this thing right here is giving them a fantastic rate. That's why your dollar has taken an absolute shoe bag to the downside and Bitcoin said no. Logic saying that dollar dominance down, Bitcoin going up, but it's showing you now that there's not even a point in even holding Bitcoin. That's what this is saying. Because if they're not buying Bitcoin, if Bitcoin's going down and the dollar dominance is going down and you're at now 0.65 appreciation, Trump, your tariffs ain't really helping people now, are they? Your dollar is just getting smacked to death. Before you incorporated these tariffs, your dollar was at 9% appreciation, would put yourself in a good position. But now you've got a dollar at 0.6%. And like I said, the cabinet is selling this dream that he's the best president. He genuinely is a good president, okay? But he did say it. There's going to be some difficult transitionary periods, but we'll get through them. He's obviously playing the long game. We're looking for price action on certain timeframes, smaller timeframes. We want to make money now and what have you. But you have to take into consideration the bigger picture, the logic of why he's doing what he's doing. Yeah, no problem. Let's get inflation going. Because come on, we were operating at 3.4, 3.5, 3.6% inflation, and the stock market was pumping. Your Bitcoin was pumping on inflation being higher. Now it's at 2.4%, and it's like, Trump's like, okay, no problem. Let's see if we can sort out these tariffs, make a bit of cash. It might increase inflation a little bit, but never mind. We're not at really extreme levels. So that's the logic. I think everyone is too bearish. Economy is doing better than expected. Most tariffs paused. Tax cuts soon. Printing soon. Listen, the problem is your tariff has paused. It hasn't gone away. Flatline, we're going to be having 10% across the board. But you've got China and their retaliation. You know, some analysts have come out saying that it's going to impact, it's going to affect 80% of the products that come into that China produces, okay, gets sent to the US. All those products are going to experience price increases. It's going to force either a flash crash, all right, but then it's going to force the Fed to do something pretty quick. They ain't cutting the rates, man. They're not cutting the rates. They're really not cutting them, even though they're saying that they're expecting it. And we've been hearing this game for quite some time. They are not cutting the rates, because inflation is going to go up with tariffs. Any of the Fed speakers that if you listen to anything that they said, well, actually, they wrote down what they were saying today. But the majority of them are up in the air about inflation. They are concerned about tariffs, and they don't know what the impact's going to be. So, yeah. Why every crypto YouTuber wants money printer, everything will be more expensive. Of course it will, because inflation will go up. Because what they do is they think of the M2 money supply, okay? And then they think, oh, if the money's going to be coming in, then that means people are going to be buying Bitcoin. Logic says that, yeah, but it's money is not going anywhere. It's not even going to the safest asset. It's not even going into the dollar. Going overseas, and it's going over here. Gold traders, what did we say? You've been watching the lives, been talking about the hedge. Up she goes. There's your hedge. They hedged it, prepared themselves, vector candle recovery to the T. So I mean about Forex and commodities, they respect certain things like Euro tomorrow, more than likely will come down. It will more than likely come down. You know, dollar's going to start seeing a little bit of a recovery. Tomorrow's data will give that dictation right there. If preliminary if the PPI comes in higher, the market's probably just going to wipe out. Never mind. No. Yeah, you know what? Tino, how can money go to dollar if dollar itself is money? They retain it. They don't exercise it anywhere. Okay? They won't work on it. That means they won't go. So, like, for example, okay? This is how you got to understand it. The dollar dominance is down, okay? The euro is up. What time is it? Right. The euro is up. The stock market is down. Isn't it ironic how you're witnessing the NASDAQ and the S&P going down, the dollar's going down, the euro's going up? So what do you think investors are doing? Sell the dollars, convert to euro, buy European stock. Sometimes you see the NASDAQ and the S&P moving up and the euro's moving down. And then the dollar is moving up. So you think that they're exchanging euros to go into dollars to put those dollars to work in the stock market. Yeah? That's what's going on. Some days you see the NASDAQ moving up and the euro's moving down and the dollar's moving down. What are they doing? They're looking for risk. So they're smacking it all into the stock market. So they're selling their euros and then they're selling their dollars at the same time. Dollars are being sold. That means they could be going elsewhere and using Aussie. Okay? So that means they could be using Aussie yen to convert to then send it up. Yeah? Aussie yen is a carry trade. They'll borrow yen or dollars, sell them into Aussie to then get Aussie and go and buy stock with Australian dollars. That's what they'll do. Tina, can we talk about Bitcoin? I'm curious what to know about it. Okay, Bitcoin, here we go. And I'll give you this flavor. Well, you need to like the stream. 300 of you. The math ain't mathing. 1,500 likes. If we can achieve that in tonight's live, that'll be wonderful. I'm going to break down Bitcoin in 2 minutes. Here we go. So, daily time frame. Most of the people are looking at the idea of a death cross itself. This strong close into this previous candlestick just shows you that it's just not there for Bitcoin. Now, I'm still expecting Bitcoin to come down and eat the liquidity down here with the green vector candle. The next hedgeable event will be China stepping up and saying to the US, it's dustbin time. Checkmate. They're going to come out with something. However, Trump did say that it looks like they want to try and make a deal and thinks it's going to work out really well. But when the media is talking about China, quote, fighting to the end, that doesn't sound like a deal is getting made when you're fighting to the end, you know? So here we go. Tino, should I be looking for a break of structure to the downside on Aussie dollar and New Zealand dollar? On the CME Forex metric, they are low, or what? Break of structure to the downside on Aussie dollar. Yeah, we're going back into these vectors. Yeah. That would be a very significant spot for it. Yeah, I'd be looking down at 0.6. That's what I'd be looking for. Tina, the math don't math because of common core maths. Oh, okay. Tina, what is the curry? It's the carry trade, bro. When we're going to hear another story? Yeah, the story is inflation down. That's bad news. Tina, is the CPI and the PPI data lagged? Are those current or values from previous months? So that means that next month's data will be juicy. More than likely, because remember, the CPI data does not factor in food and energy. And the one time when energy prices are down, like you just love that. But it doesn't factor in food and energy. But what's going to happen now is the next CPI reading and, of course, PPI reading is going to reflect behavior. Okay. What are manufacturers doing? If tomorrow's PPI data comes in and it's higher than 0.1%, which is what they're expecting, it's going to tell you that companies are getting ready to put the costs onto people. And Amazon said it today. Sellers are going to increase their prices. And if sellers are increasing their prices, well, they're obviously being prompted to do so by manufacturers. So you've just got this story, inflation going up. Okay. Anyway, if inflation down, why is gold at all-time high? The reason gold is at all-time high is because investors are seeking the safety. They need a safe haven, okay? And there's no point in retaining dollars. Why would you hold dollars at 0.6% appreciation when you've got gold that trades against it? That parity right there is what works, okay? Dollar down, gold up. But right now it's dollar down, Bitcoin down, where that ain't mathing, bro. Okay? And simply that when inflation goes down, okay, but gold goes up, the result of that inflation going down realistically tells you that they know they're going to need to increase cut the interest rates in the future, and bets are coming in for them to cut the rates. That's what I said this morning, that there are 3 plays on gold. You've got the safe haven logic, you've got the idea that interest rates are coming lower, and then you've got the disparity between gold and dollar itself, okay? The appreciation and the purchasing power of the dollar, okay? Right now, we've got the 2, where you've got the safe haven, then you've got the expectation that interest rates are going to get cut. Those are the 2 things. And whatever factors come into play with that to give that logic of gold going higher, that's what's forcing investors to go there. But for me, gold, they will always hedge the event, prepare themselves, and then they will send gold's price to the upside. They don't want They don't want Trump to buy gold at low prices. I'm talking about Chinese people. Oh, okay. Why is silver not following gold? Because silver's not really a safe haven. It's not a safe haven. Do we have one more leg down in the corrective move, or are we entering a bear market? Fundamentally, we are in a bear market, okay? When I say fundamentally, we have got the NASDAQ is in a bear market. And where is it? From the high itself, all-time high, down to the low, it is a 26% correction, okay? And we are technically, because we've corrected that much, we do have quite a bit of interest here. The news that has stimulated this move to the upside, it's not consistent with the longevity of things. You've got 3 months of tariffs being off the table, but you've got continuous back and forth. Are they going to make a deal? Yes or no? Is China going to respond? And whatever other surprises that come along as well. The debt ceiling has been adjusted again. So for the next 2 years, we don't need to worry about that. So all of what they're trying to do is getting undone by increasing the debt ceiling. Bessent threw that in the cabinet and was like, yeah, we're going to increase the debt ceiling. So 2 years, we don't need to worry about that. Do you understand what that means? That undermines the US debt. The credit, it undermines the US debt. You're increasing the debt ceiling again. That's why no one is buying bonds right now. Investors are losing faith in the dollar. That's why you hear them saying bonds are the best, bonds are the best. Get the fuck out of here, man. It's not the best. This thing should be soaring right now if it was. This is where people go when they are concerned. Not gold. It's a zero yielding asset. 10-year bond market. There's your yield. And because they don't have faith in the debt, They're going to demand higher rates. That goes to 5%. That's when you'll get the world's attention. Hit the like button, subscribe. I hope you've enjoyed it. Mad love and respect. And I'll be tuning in to you all tomorrow. I'm sorry, the live wasn't short. Peace.